Into this video, I'm going to be sharing with y'all a stock that has been beaten down for quite some time, and it looks wonderful, especially for long-term investors. I'm also going to be sharing a stock for the bears as well. All right, so let's dive into the charts. Right off the bat, we got the Nasdaq futures, and in the last video, I was a little bit iffy because the way this thing broke down was so sus. And I told you guys that time will tell which direction it would go, right? It was on the 22nd, or I would say the 21st, in between those 2 days, just to be very, very cautious about what happens next. And the Nasdaq didn't break through 29,444. It just gave small dojis until it had a big gap down between Wednesday and Thursday, and then continued to sell off on Friday the 24th. So this is looking cleaner with time. The bears are really in control, right? All of these bears that seemed trapped at that time finally got the follow through that they wanted. And the price target for this one, 27,000. We already got to 28,000 today, but 27,000 is very, very near. The bears are in full control, even on the weekly as well, right? And that would kind of line up perfectly with the previous levels of resistance, which is right here. Like the previous level is at what, 26,300, a little bit lower than 27,000. But again, the market could exceed expectations, and it could fall a bit further before we see any type of bounce. All right, so that's for the Nasdaq. Now the SPY. I drew something on the SPY too, and the SPY went sideways and went nowhere. Actually, no, it wasn't /yes. Let me see here. All right, /es 4-hour. Same thing again, right? It went sideways, and then on Thursday went downward, broke that line of support, and now the situation is looking quite bearish now, as y'all can see. Next level of support for this one is right down here at 7,200. The daily chart looks like this. Bearish. Very nasty price action compared to the Nasdaq, but the bears are in control of this one as well. Now, the stock for this video, the stock that a lot of investors at Wall Street, it looks like Wall Street is making a big bet on it. And I don't know if y'all noticed, but there was a rotation of money from the semis, also from, well, mostly the semis, right, into the software stocks. Even Microsoft went up a little bit. But the stock that I want to share with you guys that I've been beaten down for a very long time, and that's making the recovery, is Intuit. INTU, as y'all see on the thumbnail. Now, this stock has been beaten down from 818 all the way down to 250. It's 70% drop, all right? On the monthly chart, this looks quite beautiful. It looks great. This is a spot as a long-term investor that I like. Just like I told y'all with Netflix, these are spots that I really, really like buying at these specific prices for the long term. All right, this is an extreme over exaggeration. Eventually, the stock is gonna start rolling out good news. But during the last like 2 or 3 quarters, it's just been getting slammed, and now it's at a good price. It's back down to like the pandemic lows, which is great. Okay, now there is a structure on there. It's on the 1 hour and the 4 hour. There is a ascending triangle on the chart. A little sloppy, and the slop is located here. I don't like that, but for the sake of this video, I'm going to ignore it. All right, and the breakout happened overnight. The volume is increasing, which is good, and there are also the gaps at the top, lots of gaps at the top, but the nearest ones is the one located right here at 340, and then the next one is all the way up to 380, right? So there's a lot of upside on this stock. Therefore, I want to share it in today's video. Am I worried about this one, or I would say, do I have any worries? The answer is yes, right? Because usually, whenever there's a setup like this, what tend to happen, or at least what I expect, is the stock to open up a little bit higher and then immediately start sprinting out the gates, right? I expect a push up to here, like 307, 310, and then a massive push to the upside, usually. But because this thing left a gap behind, right, there is a small chance that it could sell off in the first 5 minutes, all the way down here to 294, drag its feet, do a whole lot of nothing, right? And as long as they hold this line of support, there is always a chance that it's going to do what it's supposed to do, which is to get up here. But not tomorrow, obviously, if this happens, right? That will be for Wednesday or for Thursday. So just keep your eyes out for that. That gap behind is a bit suspect. It is, like, it is small, but it's definitely there, and it might cause a problem. So do not be surprised if we see a flash crash in the first 5 minutes, right? Be on the lookout for that. But ultimately, I do expect to see the stock all the way up to 340, 350. Now, the stock for the bears. The stock for the bears. That one is going to be... It's going to be TXN. This is part of the semiconductor stocks. Now, I want to share this one with you because, first and foremost, it's kind of overvalued. Obviously, there's other semiconductor stocks that are a bit more overbought than this one, all right? But the stock itself is showing weakness, which I really, really like. It is lagging behind MU. MU has been beaten much, much more than this. But there's a gap at the bottom right here from the last, at least from 2 earnings ago, right here at 235. It left a big opening. Support is looking kind of weak. Support is like right at 275. There is a structure on the 4-hour. There's something on here, right? There's presence. There you go. There is a descending triangle on the chart. The breakdown is extremely sloppy, all right? But you definitely want to keep your eyes on it. Have an alert right here at 273. And patiently wait for it to ring. Because there are dip buyers located here and here that do not want to see the stock go below that level, especially below 270. If that happens, then the sell-off on this one will definitely accelerate. And we will see this thing go all the way down to... Again, I don't know how fast, but I do expect it to get down here at some point. All right. And we're going to segue this into like a question that somebody had. Somebody asked me to look at Marvel. Marvel is actually ahead of the curve because Marvel had the similar gap at the bottom at 250 right here. They got taken care of from the last earnings, right? So price action like this, hopefully better than this, is what I'm expecting for TXN, just to take care of the gap at the bottom. But for the way this is looking now, the next level down is right here for Marvel at 175. And then at 140, right? The stock is not going to stop dropping until MU gets down to 757. Yeah, that's what I mentioned a few videos ago. I told you guys I was bearish until MU gets to that point. Let's check it out real quick. So this is MU. MU right now is down by $25 in after hours, right? So I have an alert right here, and this is a dead cat bounce. This is a dead cat bounce. So I have another alert right here at 875. That should ring tomorrow if we continue to see that rotation from the semis and into the software, like IGV ETF and into it. All right, so just look out for that flow of money out of the semis and into the software stocks, and watch for this gap to get filled, along with TXN to drop ferociously all the way down to 240. All right. Now the next one that we gotta look at. Somebody asked me to do an update on Apple, and I mentioned something specific with Apple. I mentioned the day that Apple closes below 340 is the day that I will be looking to short it. And I wanted to short it. And I'm gonna tell you why I didn't. Right. So I released the video here on this day. And obviously there was other stocks in the market that looked a lot better than this price action. And then on the 27th, I was very interested in shorting it down until I saw something that I didn't like. So I'm gonna zoom into this portion alone, right? We're gonna forget power hour. And I tried to take a day trade on there, and I got out of it and I broke even for this reason. I was waiting for a structure like this. I saw this thing, this bearish pennant, right? And my entry was obviously, y'all know how much my style. I got in right here, right below 320.5, and I ended up breaking even literally like 10 or 15 minutes later because it just refused to fall, and the stop loss that I had was exactly 320.5, right? So I was up a little bit, and then the money just went away, and it just took too long, and I lost my patience, and I just got rid of it. And I hated the way it closed because it didn't close below my entry point. I would have liked to get back in right here in this box, right at 319, at 320. The highest would have been 320.4, right? But because it closed way above here, this entire thing is just sloppy, and I'm not interested in shorting it, and I don't have the confidence in this thing that it will sell off out the gates, right? This didn't happen because the structure was so sloppy. I had the suspicion that this could happen. Obviously, the bullish move, I didn't think it would be so massive, and if I anticipated the bullish move, I would have taken a day trade on it, right? But it just didn't look clean enough for me to go short on Apple at that specific point. So right now I'm on the sidelines on Apple. I have an alert right here at 333. I'm waiting for its clean structure to show up, and when it does, I'm going to short again. Like either it's gonna be a day trade or it's going to be a swing trade, but it has to be clean. If it's not clean, I won't touch it. If it doesn't show me structure, I won't trade it, right? So that's, hopefully that helps to the person who asked about Apple and what happened and how I approached it. Obviously, I didn't even touch it because again, I hated the way it looked. Now, the last stock that we gotta look at is HIMS. Somebody had been asking about this for days. Now, HIMS looks like this. It's recovering from the sell-off that it had. It went all the way down to near $14. Long-term investors, I'm sure y'all love the way this is moving. The trend is bullish on HIMS. Like it's trying to make its way up. It's moving the way Carvana did for a very long time before going parabolic before the fall, right? It went parabolic at some point, but I drew something like this for y'all with Carvana, and I told y'all that this level was a good point for us to see a bounce on Carvana, and HIMS look exactly the same way, right? So choppiness along this line. If it gets below, you should be worried. If it doesn't get below, then you should be fine, right? Watch the way the stock move along the line. Above the line, the trend is bullish. Below the line, investors are going to panic. And obviously, there is earnings report coming out in the middle of August, which is something that you should be worried about, right? But again, this is my thoughts on it. That's my first thought when I look at the stock and the way this is progressing to the upside. Are there some gaps above? Yes, right here at 58. Eventually, it's going to get filled. I just don't know when. It's my honest thoughts on all of these stocks, and that is the end of the video. Again, I am not your financial advisor. Do your own research and make your own decisions. All right. Don't forget to follow me on social media at Patternology Lab on Instagram and on X. And lastly, don't forget to like and subscribe.